checking in with what's been going on with the Fed. We've been doing that every week pretty much since we started this. They had that long-awaited meeting that ripped the Band-Aid off moment, as you have been kind of talking about for weeks and weeks now. How did this meeting actually fare against expectations?
It actually went a lot better than what I thought. And I was the bull going into it. So it turns out the rip the Band-Aid off thesis is playing out even better than I would have ever hoped. Stocks, like I said at the top of the call, stocks have staged the best week since 2020 last week. So the whole market rallied. And there was a big rally on Tuesday leading up to the Fed. Then we rallied before the Fed spoke on Wednesday, dropped when the Fed came out and sounded super hawkish, but then just rebounded with vigor and had a huge rally into the close, had a huge rally on Thursday, had a huge rally on Friday, gave back a little bit of gains on Monday, and then had another huge rally on Tuesday. So we're looking at very unique price action today. Indeed, what we saw was that the NASDAQ rattled at some point last week. It rattled off 3 consecutive days of gains greater than 1%. It was actually 4 consecutive days, but at the time we ran the analysis, we ran it on Thursday afternoon. So they had rattled off 3 consecutive days of 1% gains, Tuesday, Wednesday, Thursday. And the total net gain over that period was in excess of 7%. It was about 8% action. That is very rare trading action. It has only happened 3 times before over the past 20 years. And every time it did happen, it was either at or very close to the bottom of a sell-off in tech stocks. And over the subsequent 12 months from it happening, tech stocks rallied anywhere between 20 to 40%. So the price action today is getting pretty bullish, pretty bullish. Why is that? It's because the Fed injected certainty into the markets. There's this whole notion out there that it's rate hikes or the fear of rate hikes that is killing the market. And that is total hocus pocus, bogus, hogwash, whatever word you want to use in there. I can't curse, so I'm going to keep it PG. But that is just totally nonsense. The stock market can handle rate hikes. There have been 12 rate hike cycles since 1970. The average annualized gain in the S&P 500 during those rate hike cycles is 10%. That's a good gain. Stocks perform well during rate hikes. Last rate hike cycle, 2016 to 2018, late 2016 to 2018, stocks did well. So you have to understand that this whole notion that rate hikes work against the stock market, not true. Not true. Historically false. What the market doesn't like, what does work against the stock market is uncertainty. The market hates uncertainty. And what we had in Fed policy between December and March was so much uncertainty.
We'll let you know. We're going to let you know in March, but we're not going to give you anything.
Well, what happened is that in December, they came out and sounded still pretty dovish. Like they said they're going to hike 3 times in 2022, but that was still super dovish. Then we got red hot inflation in January, red hot inflation in February. We entered a war. We got soaring oil prices. So we had this still pretty dovish sounding Fed mixed with all of this inflation, crazy uncertainty. And what that created is a lot of uncertainty as to, well, what's the Fed going to do now? Like, are they going to stay dovish? Are they going to hike? What are they going to do? And I think the market celebrated the fact that last Wednesday, Powell finally put his foot down. And while he's still saying, we're going to monitor the situation and we're going to be dynamic and respond to current events and incoming data, he did kind of very firmly set a path forward or set the precedent that so long as inflation remains hot, we're going to fight it. We're going to fight it with 25 basis point hikes at every meeting. And if we need to, we're going to fight it with 50 basis point hikes at certain meetings. So that's hawkish. That may be a bit spooky, but it's also certain. And we know what they're going to do. They're going to fight inflation. That certainty has re-injected stability and confidence and bullish sentiment back into the markets. And that's why you've seen stocks rally in a pretty significant way ever since that decision, ever since the statement came out, ever since Powell's press conference. And Powell even sounded a more hawkish tone on Monday of this past week. That's when he opened the table up for multiple 50 basis point hikes, and you saw yield surge. So you're seeing hawkish Fed finally.
Okay.
But contrary to what a lot of people thought, that's coinciding with the market rally, because a hawkish Fed on one hand is certainty, and on the other hand, it's fighting inflation. So the goal here, the hope is that the Fed, in doing all of this, will quell inflation. So by 2023, we are not in an inflationary environment. We are actually in a 2% inflation environment that still has solid employment, and that's a good environment to be invested in. So I think there is hope that the Fed is going to succeed in its efforts to fight inflation, and the markets like the fact that there's certainty. So that combination is what is allowing stocks to head higher on the back of that Fed decision.
So now that we have a little bit more certainty, what does this readjustment now look like for the rest of 2022?
The readjustment
going into the rest of 22
in equity markets.
Yeah.
I think this is the beginning of the emergence of a new hypergrowth bull market.
Okay.
I believe on this call before, and I know I've mused about it multiple times in my investment products. But the precedent here is the last rate hike cycle. That the Fed hiked rates in late 2015. And then for a year, there was total uncertainty. They didn't hike rates, but at every meeting, people were like, are they going to hike? Are they not going to hike? It was total uncertainty throughout 2016. During that time, hypergrowth tech stocks, long duration assets, risk assets underperformed meaningfully because it was uncertainty around Fed policy and how they're going to impact rates. But once the Fed hiked rates again in December 2016 and actually embarked on a consistent and steady rate hike cycle from late 2016 to late 2018, those same beaten up hypergrowth tech stocks went crazy. In 2017, Cathie Wood's ARK fund returned greater than 90%. That's an amazing 1 year return. And it was in the same year that last rate hike cycle got started. Because uncertainty was removed, certainty was injected, those stocks have been so beaten up heading into that decision that their valuations were benchmarked for a worst case outcome. You didn't get a worst case outcome, the stock soared. I think you're going to get the same situation here. How do equity markets adjust? I think you're going to get a new hypergrowth bull market emerge. I think stocks are going to perform just fine. And I think that the worst of what we've seen is over. I also think that a ceasefire is going to happen in Russia, Ukraine. We already talked about that. I think that's going to provide some lift to the equity markets. I think the COVID-19 situation in China is going to get handled pretty quickly. I think that's going to provide some lift to market. So I'm starting to sense this shift in risk appetites in the equity markets, and that shift is going to benefit the assets that have been most beaten up over the past few months and allow them to stage some pretty incredible rebounds over the next few months. And that's my outlook for the rest of 2022. I'm very bullish on where hypergrowth tech stocks in particular can trend over the next 12 months.
We also touched on this last week, and I want to know, has this also affected insider buying? Has that spree kind of continued where people are buying up all these shares of the companies that they're invested in?
Yep, absolutely.
It has, okay.
So we did that analysis last week, and we found that there are about $500 million worth of insider purchases across 110 different transactions in hypergrowth tech stocks over the span of 3 weeks. It was a surge that we'd never seen before in that specific group of stocks. And then since we did that analysis, every single day there's more. CEO buys here, COO buys here, board member buys here, insider buying that's there, stock pops of insider buying here. We've read every single day since then. We've read multiple headlines per day on more insider buying occurring. So we haven't redone that analysis. We plan to redo it later this week to incorporate the last week of insider buying activity. But we're seeing it in headlines everywhere. We're checking the filings. Yes, that insider buying spree has continued and perhaps even accelerated over the past few days. And that gives us a lot of confidence.
Yeah.
That gives us a ton of confidence that I want to align them with the CEOs of these companies.
Mm-hmm.
I want to align them with the inside of these companies because those are the people that know the most. I can sit up here and talk all I want about solid state batteries, about flying aircrafts, about solar in space, la-di-da. At the end of the day, I am still an outsider looking through a glass window.
Mm-hmm.
I do not know as much as the insider of the company. I don't. Plain and simple, and nobody does. And if you do, that's insider trading and that's illegal. So I am on the outside looking in. These guys are on the inside day to day working with these businesses, working with these technologies, and they're buying. As an outsider looking in, I'm like, oh my goodness.
Yeah.
Count me in. Count me in. And the fact that the buying is so widespread across so many different stocks, and it's multiple insiders in these companies. It's not just like the CEOs going all in. It's like the CEOs going all in, and the COO, and the CFO, and the board members are hopping in the action too. Oh, and the hedge funds that are 10% owners and have board seats, they're backing too. It's such widespread insider buying, and it gives me a ton of confidence in a lot of the stocks that we own that are benefiting from this insider buying. So yeah, that is a really bullish indicator on top of everything we just talked about. So you got price action improving, you got the insider buying, you got the big scary rate hike in the rearview mirror, you got what could be a Russia-Ukraine ceasefire in the next few weeks. You got China saying COVID-19, we're not going to allow that to be a problem again. All of a sudden, all those risk factors that look like world enders or economy enders a few weeks back are now looking like little boo-boos. And the market is responding by rallying, by going higher. So does that mean we're out of the woods? Does that mean everything's, coast is clear, go full bull, everything's crazy? No, always have some caution, always stay a bit reserved in markets, as you have to do. They're risk markets, always be monitoring the risks. But I think it does mean that where we stand today is a lot more bullish place than where we stood 2 weeks ago. And from that perspective, if you were waiting, now is the time to get in. If you already got in, keep riding the wave higher. And on the next big leg lower, take some more nibbles because the 12-month outlook here is starting to shape up pretty favorably.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.